Well, good morning, everybody. This is Andrew Horowitz, and it is Friday. It's May 31st, 2019, end of the month. And what a month has been. We've had some crazy times with regard to the markets. I mean, and now all of a sudden, out of nowhere, what are we getting? We're getting a tariff by tweet. We're getting, once again, a surprise. And usually it happens on the weekends. But this time it's happening on a Thursday night. I don't know exactly what is on the mind of President Trump with regard to these tariffs, but the bottom line is that it is shaking up markets. We're seeing that currencies are moving around pretty wildly. Crude oil is getting dumped. We're seeing that futures are getting dumped. And of course, the Mexican market, if you look at the ETF, is down about 5.5%. We're going to talk about a variety of things today. We're going to do a rundown of what's happening with markets, what would happen this week, what we'll look at today, what some of the things we want to look at for next week. And we do this each and every Friday. So make sure to register, keep watching your emails if you have registered. And of course, go over to TriggerCharts.com where you can check out all the indicators, a lot of educational videos, as well as information about our trading process using the Commander series, the KRI indicator, as well as altimeter, and some freebies there as well. So over on TradeStation, you can find that as well. We'll give you some links to that in the chat as we go along today. In addition to that, if you have any questions along the way, please make sure to check those out. I'm going to launch a poll right now, and I want you to do me a favor and just quickly give me an insight about what you trade so that we can make sure that these webinars are the best they can be. Some people may trade futures, some people may trade Forex, cryptocurrencies, etc. So what do you say we get on with it? In addition to that, what I would like you to do is in the chat as we go along, as we get towards the end, I'm going to try to hit your stocks, your futures, your positions as well. Take a look at what's going on with those and then give you some insights of what we see and how we see it using our TriggerCharts volume and price-based indicators. Before I go on with that, I just want to mention that there's some important issues in why we use some of the things we do, because if you really want to understand where the footprint is or essentially where traders are laying down their bets, where they're putting down their line on the sand of where they're going to trade. Really, how do you do it with just price? Because price can mean anything. But we're looking at how much they're trading, and that's where volume comes in at a particular price point, and that gives us a really good idea of where they are in terms of their desire to either buy, sell, or stay put. Well, let's go over and talk about what's going on right now. This is going to be the first month of 2019 where we're seeing a down month. And that's pretty interesting because we've seen an incredible recovery off of that bottom, that big bottom that we saw back in December. And all of a sudden we saw a significant shift by the Fed. The Fed saying, hey, you know what? Maybe we'll pause. We'll take a little bit of a time out here and see how things go. Some people look at it as it was political, rankering that got them into that position. Some say, well, maybe they're seeing something that we don't know about, and look at where it is on the yield curve and the markets. We're going to talk about that because the yield curve is looking pretty interesting. But we are going to see the first down month. This is going to be now 6 weeks, unless a miracle happens today, but 6 weeks of down moves in the markets right now. The tariff shock that we saw last night is really, again, throwing in a curveball. Right now, futures are down about 257 on the Dow. We're seeing that the SPOs are down about 30, Nasdaq down about 93. And again, this is on the heels of already a market that's been a little crispy, let's say. We've been seeing that the markets have been selling off pretty well into this and really getting no lift whatsoever after President Trump came out with a no-go on the China deal. So what's happening in economics? Well, one of the things that's interesting is we're seeing that GDP is holding up pretty well. The latest reading, and that was the second reading of GDP, came in at 3.2% this week, down a little bit from last month, the first read. What we're seeing is that this is an interesting situation because a lot of the inventory builds that we've been seeing over the last few months have come into play in this GDP number and spiking GDP by about 0.6% overall. And what that means is that if we strip out the inventory numbers, which is a build to inventories, either inventories that are not sold or inventories that were built up in order to make sure that they got ahead of any price increases overall. And what we're seeing here is that these inventory numbers are really doing a big part to lift GDP. Without those, we'd have a GDP still pretty good or reasonable, not great, 2.4%. 2.5%, somewhere along that. For the first quarter, that's not the worst thing in the world. But we also saw that we're seeing a rebound in consumer sentiment, which is interesting. We're seeing that things like the ISM index, which is going to come out next week, has been falling a bit in terms of manufacturing. I expect that to continue its fall. And across the globe, we're seeing that PMIs, or manufacturing and purchasing managers indices around the world, in particular, those that are in Europe, are looking just absolutely awful, just terrible. So, the fact of the matter is, when we're looking at the PMIs there, we're looking at the numbers last night in China, things are falling apart pretty quickly. Good news that the Fed did not keep with their rate hikes. Right now, we're seeing somewhere about I think a 50% chance of at least one rate hike by the end of this year, and is going higher than that. Is probably with this number that we see here and what's going on right now in the markets, we'll see some additional potential for the Fed to cut, which I find pretty amazing, because now with all these tariffs, you're going to see some potential inflation picking up. And on top of that, when you look at the employment numbers, which are extremely strong, I mean, initial claims in the 217 range and unemployment at 3.6%, adding anywhere from 150 to 200,000 or so new employees to the payrolls every single month. That is pretty amazing. For the Fed to say that they're not going to raise rates in the face of their dual mandate, I don't know what it's saying. It may be just simply that bonds got ahead of them. But what's happening now is bonds are not ahead of them anymore. As a matter of fact, they came back very significantly. If you looked at what's gone on with the 2, 5, 10-year bonds, we're seeing the 2-year possibly cut under 2% here. Let's take a look here. Next week coming up, we have ISM manufacturing, factory orders, and ISM services. I'm going to put this on the screen right now. You can take a look at what's going to happen actually next week and what is the schedule of economic indicators that will move the markets. It is a much busier week next week. And we have, of course, at the end of the week, the really important jobs numbers. And when you look at what's happening compared to this week, we had a few numbers that were important. Next week is a very important week. We have 2 numbers in the beginning of the week that will definitely set the tone. We have the ISM manufacturing number. About 30% of the U.S. economy is based on manufacturing right now, 70% on services. So when we look at this, we look at the fact that on Monday, right at 10 o'clock, we'll see the ISM services, ISM manufacturing number. We'll see some construction spending, factory orders on Tuesday, and then Wednesday, we're going to see ADP, which will give us a little bit of a heads up of what's happening in the payroll area for in advance of Friday's number. And then we're going to see the ISM non-manufacturing number as well, again, the services number. Fed's Beige Book will come out, probably show a little bit of moderation in a lot of areas. On Thursday, initial claims, more jobs numbers coming out. We'll see some productivity numbers, which will be interesting to see. But on Friday, like I said, non-farm payrolls are going to be coming out. The unemployment rate will be coming out, and that's pretty impressive. Because if we see a continuation of this trend that we've seen for some time now, I mean, that's going to be something that's going to be, I think, interesting in light of what we've seen otherwise. One of the other things that I want to show you, if you haven't seen it yet, is this chart. This chart is pretty fascinating to me. When you look at the yield curve, and let's take a look at this number right here. What we're seeing is that these are 2 separate yield curves. In other words, we're looking at the short to the long rates of interest on treasuries. We're looking at this over a period of time and then plotting them to see where they are. So we're looking at 2 different axes here. One is going to show us the actual rate at a given point, and here's the rate on the right-hand axis. Well, when you look at this, let's go to what we saw first of all with the red line. In the red line, what we're looking at here is this whole area of, I would say, a interesting upslope towards the back half of the curve. But what we're seeing here also, when we look at right about here, what we're seeing is that there was an inversion of the curve where the rates moving along were lower than the rates on the short end. Now look at this right now. Look at where we are here now, right? Look at this. This one right now, we're even seeing a much fatter belly. Look at that belly right there. The belly of the curve has inverted dramatically compared to where it was. Now, when we're looking at this now, you see that we're probably at the 6-month T-bill, which is the inflection point approximately. We should see normally a slope up, should, kind of continue going like this. That's a normal curve. What we're seeing right now is that it is getting very much inverted, and we're seeing that the shorter term rates are higher than the long-term rates, all the way out to about, I would say, close to about the 10-year rate. That's pretty amazing. What that's telling us is that the Fed probably is bound to cut rates. They need to bring this down. This is not good for the economy. This is not good for banks, not good for banks at all. This cuts right into their margin. Don't forget what's happening with banks is they are actually giving out interest on money in this end of the curve, on the short end of the curve, but they're loaning it out at the longer end of the curve. Their spread between the two is significantly protracted. So, when you look at that, and we see that there is this kind of formation when it comes to the Treasury yield and the yield curve, that's a problem. Theme is, I think June is the make it or break it month. I think that right now we got to change it because we got to wonder how this is going to play out with these tariffs right now. Because when you look at what's going on in June, we know there's a G20 meeting coming up. There's supposed to be some kind of discussion about what's going on with regard to, the tariffs with Japan. We got this yield curve and political duels going on right now with the Democrats and the Republicans. I mentioned again, make sure you're on the mailing list for the webinar updates. You can go over to TriggerCharts.com and just put in your name and your email address, and you'll get all the updates. Let's take a look at the chart on the right here. Let's take a look right over here, because what we're seeing here is, there's a lot of things going on here. So let's kind of take a look at this one at a time and see what's happening here. But basically what we have here is a chart of the S&P 500 ETF. SPY is the symbol. And what we're seeing here is that right now we're trading at about pre-market about 276. That'll be right about this level right here, about 276 and change. And what I drew on here was a Fibonacci retracement back from the lows that we saw in December all the way up to the highs and the peaks that we saw back right before May started. And what we noticed is that there's kind of nothingness in this zone. And we add to that the fact that if we're at 276 right now, when I look left and I look at my altimeters and I look at the moving averages, we're seeing that the 50-day moving average, and I'll highlight this for you so we can kind of get there and look at this. The 50-day average is moving. Oh, okay. So let's see if we can do this. We're covering that up. That's probably better. 50. Hopefully that's better. Thank you. Hopefully we can clean that up. You could probably move that video around if you want to. I'm not sure how to actually move it around my video. But when we look at this chart and we look at this, we're rolling over. The 50-day moving average is rolling back down. We got right on the 100-day moving average, and we bounced off the 200-day moving average yesterday. Moving averages are important in my opinion. I much prefer to look at volume-based indicators. And when you look at this, what we're seeing is that, where's our volume-based indicator showing? There's really not much. Down at 275 maybe is a level. When we look a little bit further out, and we're going to look to the left here part of this pane, and I'm going to get rid of a lot of this other stuff here because there's a lot of confusion going on here. The probability is 261 is a really good support point, and probably 263.33 when I look left. There's a lot of stuff going on here. Let's get a look at what's happening here. And now that you mentioned that, hopefully we'll look at some daily stuff here. We're going to look at what's happening with the SPUs I mentioned here. I'm going to move this up. Really want to focus on the chart on the bottom here. So what I'm looking at here right now is the idea that the SPUs, and what we're looking at here is, let me just put on a quick annotation so we could get that going. All right. Right here. Okay. So right now what we have is a level. We're trading right about this level of 2759. When I look left and you kind of look over here into this range here, there's not much going on until we hit probably about, I would say, give or take the level about 3% lower. Let's kind of bring that up right about here. 2731 is probably the next level of interest right there. 2722. That's the level I would draw. And actually, when I would draw a line, because I like doing my lines here, everybody knows that if you follow me for any time. This is kind of a clean area that I would see as the first level of support on the S&P. We're seeing that the aileron indicator is showing a downturn, and that is no surprise. We saw that from the beginning of May pretty much. Really no reason to start getting long here. Our indicator went short a couple of days back, about 5 days back, actually. You can see that yellow mark right there. I'll zoom in on that for you. You can see that yellow mark is actually giving us a short signal right there, and we've been 4 days short with that right now. Not much difference when it comes to the Dow Jones minis. Not much different. We're seeing anything right now. The Qs are showing the same kind of sign. We got a signal a little bit earlier there. Again, with the Qs here, there is some more support probably down right there at the 7,074 level. That's where I see it, at least. There's some congestion also in the area right about here. That's kind of an interesting area. And when you look at the area kind of congestion, you kind of got to realize that what that means is that you're not going to see necessarily a swoosh down. It may be a little bit of a choppy run down getting towards that magnet area on the bottom line of this. So, I think that when we see that there is this kind of structure where we do have a significant amount of altimeters that are there, that we see the volume is there, that we see that there is traders and a consistency where there's a line across the left, particularly using this altimeter, because that is giving us our volume-based indication of where we are. That's an area that I really focus on. So the Nasdaq looks like it has some downside as well from here, but everything does. Everything looks like it has some downside. You want to take a look at the Mexican peso. This is inverted now on the right-hand side. This is 30-minute on the left-hand side. This is the daily chart on the right-hand side. Whatever you want to look at, this is when that tweet came out. We saw this right here. That's when the tweet came out last night. Mexican peso started dropping. Remember, this is inverted. The US dollar is actually gaining strength against the Mexican peso by about 3% today. And that's a significant move when it comes to currencies. And we're seeing that the Mexican markets are actually also seeing a significant amount of reverberations because of this. But you look at on the right-hand chart here, again, these are just ways to look at this. The potential is when you look at this kind of formation where there is really, let's go right here. We got a clean signal to short or to go short the Mexican peso, go long the US dollar in this scenario. There really is nothing at all blocking this at this point. There's this air, there's a hole up to about $20.20 on the US dollar Mexican pesos currency there. So when we look at this and I see that there is this kind of situation, you got a little nub right here, maybe a little nub right here that's holding on right now. You see if we spread this out a little bit, what's happening is that right there is where we are. We got a little bit of an island right here. But again, this range from here about 1978 all the way to about 1996, there's nothing there. And what that means is that when you have nothingness in something, when you have a hole, with an area where we look from right to left, when we go in this idea, and this idea that you have to really pay attention to is looking from right to left. Always look from right to left, right to left, right to left. Where is it that we are finding that there was previous levels? And I think what is important about this is you're really seeing the footprints of where traders are putting their bets. And that gives us the instinct of where we can actually be able to hold our position into. So moving along, we see, I want to kind of skip ahead for a second here, and let's take a look at EWW. Right now, EWW, which is the Mexican, make this a little bit smaller here, which is the Mexican ETF, is trading down about 5% in the pre-market right now. And what that means is we got partial currency. We have about a 3% move on currency and about a 2% move on their markets, because that's what's happening. ETFs take that into consideration. And I think when we look at that, you have to realize that, okay, so where are we going from here? So simply we take a look at here on the daily chart. Well, we can see, what do we got here? So right now we're trading at 42.33, which is probably right on this line right there, right on that base. And we look at that, it's right on the base here. So we got that little nub right there. Okay, that's okay. First of all, we know, all right, that's what we're going to be looking at from an aspect of where we are going to be trading down to potentially. So we got that. All right, what else do we got here? Well, we got a level that coincides with another level down to about 41.73. And then there's a giant hole down to about 40.25. So if in fact we do continue to see a move towards the downside, I would look at putting my levels and stops somewhere about, I would say right about here, about $40, $40 on the downside of the Mexican peso. That's how it looks to me. And then we got a couple of traders on the line here. Brian Shannon, I know you're with us today. You kind of agree with me on Mexico, on where we're going to see the EWW potentially trade down to if we don't see any kind of a bounce? Down to the 40 line, right about, give or take, about the 40 line if we break. We'll wait for him to text in. Some earning news this week, and this is going to be interesting. We saw that Sanderson Farms, a chicken producer, a poultry producer, a poultry distributor, had a nice run this year so far, up from about 100 to about 158. Came out with some interesting things. They're potentially getting into this veggie burger deal, this vegetable or alternative burger or alternative meat, non-meat burgers and non-meat meat, I guess is what you call it. Some kind of a non-meat edible. So what we have here is they did slam down on the earnings numbers yesterday, but this looks pretty good, pretty reasonable, as we saw it really pick up right from its base. Kind of zooming in here, we saw it hold very nicely. This is the beauty of working with these kind of indicators, right? We get these really nice levels that we can kind of look at as high confidence levels. So SFAM, okay. Ulta came out with earnings. Stock is down about 3.8%. Again, trading right now at about 315, which would take it down to about, I guess, right here. I would suspect that if we see some downside, Ulta's got about 311 support level. VMware also came out with earnings down about 6.8%. Right now trading at about 179. So where are we there? So look at that. Trading at 179 even. Give or take, right in line with the level of support that we would anticipate. And because the level of support here, because we have this really long period from March, so this is really key here. When you see a long period, look at how long this was, this long period of consolidation and support. That's an area that you really want to focus in on. It can give you a lot higher confidence that, you know, if traders were trading that for a very long period of time and then it broke out from there, the magnet or the attractive methodology getting back to that point is much higher. And the confidence level that you can say, well, it's going to hold would be kind of good. So when you see that there's going to be a downstroke on the opening due to earnings, well, we see that again, that 179 level is a key level of support. Where do we go from there? Well, there's a consolidation a little bit wide between the red and the blue. So the red is our resistance, or now resistance becoming support. And then the green line is the support line. Again, below it would be resistance, but above it is support. That's a hard line. And the blue line is a high volume number, high volume level, a high volume node. What that is telling us and what that is showing us is that there is a significant amount of volume actually inside of that range that is the highest level of volume it's traded that we've developed through this algorithm. So if you want to really play it down to 171, I'd be skeptical and say that, you know, I would think that there's some decent support here at about this 179 level, and then play it from there. Anybody watch what happened with Goose? This Canadian Goose. This is a stock that was a high flyer for a while. Look at this, going way back to October 18, it was down at 20, topped out at about 70, then started turning, going into a major consolidation here. You know, you look at this consolidation range that we have going across here, significant consolidation, right? That's important to know. Well, what happens when you have a long-term consolidation is that oftentimes the next move is a much greater level of move to whatever direction it's going to move in. We saw a 30% drop after its earnings came in. Okay, but their outlook was really poor. They missed a little bit on earnings, but really for a stock that had the multiples that it had of this one, it was really an area that you need to be concerned about. And this stock, while it has great fundamentals and it's been actually showing much better fundamentals over the last several months and several quarters, unfortunately, this situation really blew it out pretty badly. Now, just to mention, just to give you a quick commercial break here for 1 second here, all of our indicators, whether it's the aileron that you're looking at the bottom of the screen, whether it's the altimeter, the autopilot multi-time frame, which is the top area here, all of those are available on TradeStation, and you can get a 10-day free trial, as a matter of fact, if you use TradeStation, of any of the products at all. So there's a 10-day free trial. It's $149 a month, and you can make that up with one trade very easily. So basically, I think we have a link probably we can push into the, let's see if I can push this in here. Maybe not. There we go. There it is. Thank you. Thank you, Kevin, giving us that. So anyway, you could also, one of the things is anybody who is a new subscriber, listen to this, this is really cool. Any new subscribers to the indicators, the Commander Series indicators over on TradeStation will get a 4-hour free, $199 value. That's what we usually charge for this. A 4-hour video tutorial that's online that you can track and use at your own pace. It's kind of a coaching session that you can track around and utilize for your own benefit. So go over to that. Just email us at info@triggercharts.com once you sign up, and we'll be happy to provide that for you. Here's another one in the, first of all, the retail space has been terrible. I mean, just absolutely awful, the retail space. I mean, we're seeing some real just downstrokes that are just amazing. We're talking about from here, take a look at this. This is, I mean, we're talking about in this particular area, right? We're talking about this, look at this downstroke here. I mean, just terrible, terrible levels. We're seeing from 41 down to 33, and a drive up from the lows about 31. We're only seeing a little bit off the bottom, only about 8% off of that bottom that we saw back in December at this point. Now, Dick's Sporting Goods, they're all having a lot of trouble here. Where's the support? Where's the resistance? Well, look at that. We stopped right on this level, 33 and change. When we look back again, we got to take our various tools, just quickly draw that. And we saw that there was a significant amount of support moving back somewhere in this range, right about here. And that was a really good level that you could find for a potential for a level of interest for support. However, let's also focus in on something else that's important. We called the short 3 days ago, okay, at 35 and change. It's now at 33. Do we get out of this right now? Well, not really, unless we get a new altimeter drawn where we see that this turns from a red to an orange like we saw right about here. That signal is still pretty strong. Now, if you want to take your profits as move out, okay, I get it. You know, you get a nice profit. It's always good to take a profit. Why not? Let me move along here. A couple more that I want to take a look at. Stocks of interest. Yesterday, I posted on Twitter. You want to follow me at Andrew Horowitz, one word. That's type it in here. My Twitter handle. You can go check that out. I want to mention a couple of things. NEO was the stock that we put up on Twitter yesterday. This start looks it's terrible. There's nothing good to say about it. A lot of people thought this was going to be the next great thing. You know, this is going to be the thing that really is going to be competition for Tesla. This is electric cars, EVs in China. But this stock is just not getting any lift at all. People have asked me many, many times over the last several webinars that we've done, over various discussions, where is NEO going? And I said, you know what? There is nothing here. There's nothing on the bottom to the left. Look to the left. There's nothing there. This is a classic sign of, hey, you know what? If you want to get long this, have at it. But at what risk? There's the poll results, by the way, just so you can see what's happening there. Most people trade stocks that are listening today, some futures, a couple options. Nobody trading Forex. Smart group. Smart group. Forex is really difficult. Trades very thin. You get government interventions and things like we saw last night with the tweet. So bottom line is, kind of interesting to look at. Stock that I thought was interesting here, markets are open, is LK. This is Luckin Coffee. We're seeing some significant amount of rebound off those bottoms there. You can see this that we called a couple of longs, but not a lot going on. It's a pretty new stock. Beyond Meats, this stock is just on fire. Just on fire. Bottom line is it's kind of moved up dramatically. This is the time, by the way, to give me your stocks. Ford is getting a little bit hurt today. Ford came down, got some support here, probably around the 938 level. That's where I would look to get more involved in this. I have a small position in Ford recently initiated just for the heck of it, to be honest with you. There was no significant amount of upside opportunity, but I want to start nibbling at it until we get down to this 937 number. Plus, they're doing a lot of cost cutting, so that's good. GM getting hurt also. This is the tariff discussion from this morning. What else we got here? I think Qualcomm, somebody mentioned. Yeah, Qualcomm, who is that? Nick. Qualcomm. Problem is it's in the chip sector, obviously. Major supplier, got a great deal with Apple recently. Problem is, when it comes to Qualcomm right now, they also got themselves involved in an antitrust situation, and that's not good. So the stock kind of, moved this incredible move off of that very long-term consolidation that we're seeing here, all the way up to about 90, and then it's back down to 66. I mean, it kind of took that back most of about a half or 3/4 of where it was moving from when it started its move. Got time for a couple more. Maybe want to look at Bitcoin here. Bitcoin has some support at about 8,300, I would call it. But you got a big range here. It did a pretty significant downstroke yesterday, just out of nowhere in the afternoon, about 4 o'clock in the afternoon yesterday. Came down under 8,000 and all of a sudden started moving again. All right, we're going to end it up. Let's see. I got one more I think I want to look at here. Yeah. Here's the financials. Financials again with the yield curve starting to come in a little bit. You got some decent support, I would say, at about 25.90, which is about 15 cents from here. Right now, again, we called this about 4 days ago. If you look at this, 4 days ago is a short. Aileron is showing a major downtrend going on here. Really nothing that I could speak of that I would really be very happy about looking at. Bottom line is that we are in a downtrend right now. A lot of uncertainty. Weekend coming. Short week now. We got a down month. We got confirmed signals. We have no support levels for the most part. Looking left on all this. Go check out TriggerCharts over at TriggerCharts.com. We got a lot of videos to look at there. We'll have this posted on YouTube as well coming up later in the day today. You can always track our YouTube channel and check that out as well and get your free 10-day trial of TriggerCharts indicators, particularly the Commander series, which we're looking at today, and the Aileron over on the TradeStation Network. We're going to end it there. I hope you have a great day. We'll be here again next week. Line up your stocks, line up your ideas, line up your questions. We'll get to all of them. Thanks for joining me.